Greetings to the viewers. My name is Siddharth R. Mehta. Let us start our presentation by a proverb. Truth is the most valuable thing we have. Let us economize it. I hope you did like it. And the topic for today's presentation is impact of government expenditure on economic growth. Okay, I'm going to take you through the video presentation explaining what is government expenditure, government revenue, and how it impacts economic growth. Before we get into this, with which I mean what is government expenditure and what are its impact on economic growth, let us understand what is economic growth. Economic growth is important because it is the means by which we can improve the quality of our standard of living. Economic growth is an increase in the production of goods and services over a specific period. Okay, with this, we have to understand the role of government expenditure and its impact on the economy. We have to first understand from where does the government earn its money and how does the government spends its money. Okay, there are many sources of revenue expenditure for government with which we will start. How does the government earn its money? There are two sources of government revenue: taxes and non-taxes revenue. We all know one of the major earning source for the government is through direct and indirect taxes such as income tax and GST respectively. Where income tax means levy of tax on persons earning. GST means supply of goods and services. Further, there are also other taxes like wealth tax, corporation tax, property tax, custom duty, etc. And the non-tax revenue of government are government bonds, profit from state-owned companies, and etc. Now, the part is how does government spends its money? Government expenditure can be classified into revenue expenditure and capital expenditure. Example for revenue expenditures are salary to government employees, allocation of money to several ministers, etc. And capital expenditures examples are creation of assets like schools, colleges, hospitals, dams, bridges, roads, railway lines, etc. What is fiscal deficit? In technical terms or mathematical terms, I would say fiscal deficit is equal to total expenditure minus total income. In certain years, government spends more money than it earns. Then the question is from where does the government gets extra money? The answer is simple. Government borrows. Fiscal deficit is not a bad thing. If government spends money in capital expenditure, then even though it is running deficit, the government is leading a role of creating assets in the economy. The assets in the economy will give returns in the long run. However, if fiscal deficit is not kept unchecked and if government spends way too much money than what it earns, then things can get a bit problematic. Now comes the main part. Impacts of government spending on economy. Economic growth is possible only when there is development in the economy, physically in the infrastructure and on the human resources. Let's see how the government's expenditure promotes economic growth. There are positive as well as negative impact in the economy. Let us talk about positive impacts first. The first impact is educational development. Education provides a foundation for development, the groundwork on which much of our economic and social well-being is built. It is the key to increasing economic efficiency and social consistency. By increasing the value and efficiency of their labor, it helps to raise the poor from poverty. Of total government expenditure, nearly 13.1% is used for education. It is nearly 4.6% of GDP. The next impact is healthcare development. Healthcare development is another chief component of human capital. Government sector, medical colleges, medical research institutes, healthcare centers, and healthcare programs are playing a major role in health. There has been an increase in the allocation for health by 137% to rupees 2.23 lakh crores. The next impact is infrastructural development. The infrastructure sector primarily comprises of electricity, roads, telecommunications, railways, storage facilities, and gas pipelines. The government is playing a major role in infrastructural development. After independence, until 1991, government has the sole provider of infrastructural facility. Still, government role here is significant. Recently, the Indian government has taken up many large-scale infrastructure ventures. The next impact is poverty eradication. Growth with social justice is one of the main objectives of India's economic policies. Justice is done when poverty is reduced through the measures attaining of economic equality. Billion and billions of rupees have been utilized to meet this objective. Here it is a fact that in 1973 to 1974, poverty ratio in India was 55%, and now it comes down to almost 21.92% in 2020. Here, public expenditure is the mainstay. Next impact is industrial development. Industrial development have historically led to the periods of economic growth. New technologies make job easier, faster and better, which can lead to increase in business output and increase in profits. Industrialization allows countries to make optimal use of their scarce resources. It increases the quantity and quality of goods manufactured in the company, which makes a larger contribution to gross national product. The next impact is agricultural development. Study, research, and development. So far as agriculture and allies are concerned in India, the leading player is none but government, for which now India is self-dependent in foodstuff and also attaining rank with 10 in the world producing wheat, milk, vegetables, fruits, etc. The next positive impact is increasing social welfare. Government is undertaking welfare programs time to time, such as Valmiki Ambedkar Awas Yojana, Swarna Jayanti Shahari Rozgar Yojana, etc. There are also schemes introduced by the state governments. Here, a fact increase of social welfare can be observed based on life expectancy at birth, poverty ratio, literacy ratio, gender equality sex ratio, standard of living, scope of choice, economic freedom, etc. Now, it's time to see the negative impacts of government expenditure on economic growth. The first negative impact on the economy is misuse of public fund, which is growth of black money. To quote Milton Friedman, nobody spends somebody else's money as wisely as he spends his own. This seems to be true in case of Indian economy. Misuse of public money decreases productivity, increases net burden of taxpayers, and increases the degree of economic disparity. The second impact is wide wastage of public money. There are also waste of public money in open. Some examples are the government has allotted rupees 480 billion to the Mahatma Gandhi National Rural Employment Guarantee Scheme, but no sufficient achievement in the employment. And also millions of crores is used for publicity and traveling. The third negative impact is rising price level, which is inflation. Public expenditure requires injection of new currency when there is budget deficit, a common feature of Indian budget. Now, Price rise, that is, inflation is a major socio-economic problem of Indian economy. This problem is being aggravated by the misuse of public money, delay in its uses leading to release additional fund or face failure of public development project. So no proper and timely use of public money for specific heads or failure of some of the same reason for the reasons such as natural calamities, social unrest, etc. Jobless growth. One of the main objectives of the government plan and budget to open up employment opportunities. But failing to meet this objective is a common happening in India. This failure brings so many social harms, even losing value of life and living, even leading to the education qualification, not a mean of acquiring knowledge, but a mean to fight of substance, ignoring the life and livings of fellow ones. As we are moving ahead to the end of the presentation, I would like to show you some of the facts. Let us take a look at the following chart that represents government's budget for the current year. As we can see, the government has proposed to incur an amount of 29,29,000 crores and 5,54,236 crores as revenue and capital expenditures respectively. Similarly, the government expects the revenue and capital receipts to be as 17 lakh 88,424 crores and 1 lakh 88,000 crores respectively. This slide represents the amount of government's revenue allocated towards various areas. As you can see, the most of the revenue is allocated towards Ministry of Defense, followed by Ministry of Consumers Affairs, Food and Public Distribution, and by Ministry of Home Affairs. This is the end of presentation. Thank you for your valuable time.